Hello, everyone. Welcome back to this week's edition of the Midweek SPAC News and Price Update. So, as usual, this week we've had a lot going on, and I have to select a couple of stocks that interest me and that I feel are valuable for you to hear about. So, this week we've got OPES, BurgerFi, HCAC Canoo, FMCI Tattooed Chef, LCA Golden Nugget, and DPHC Lordstown. So not that many news this week, but a lot of price action to analyze. So let's get started right now. And of course, as usual, please like and subscribe. It really helps out. All right, guys, let's kick things off by talking about BurgerFi, which I haven't covered in a while. So they had really good news last week. They signed a letter of intent to open up 30 new locations, and of course, that's excellent news for BurgerFi and the investors because we all agree that the management team for OPS isn't that good. I mean, they keep making mistakes, but the management team for BurgerFi seems very good. They had a plan, right? We talked about it before. They want to open 100 locations within the next year or two, and they're actually going through with it. They're executing on their plan, even in this environment that's very difficult. You guys know, like a restaurant right now, like you would assume that they would have some obstacles. In fact, I went by the one in Charlottesville last week, and it's still closed. But they're opening new locations, so some parts of the country must still be doing okay. So of course they have the 18 in Florida. That's their main base, but they're gaining traction in some of the other states. They're even going to be opening, or at least they signed a contract to open 6 units in Saudi Arabia. So you even have international expansion. So of course that's all very bullish. And another thing that caught my eye is you have this franchisee, Manuel Sanchez Ortega, the guy that owns the franchises in DC, Maryland, and Virginia, is opening more locations. He's opening Townsend, Maryland, and Columbia, Maryland, right, by the end of this year. So, of course, that's a very bullish sign. When you have money talks, right, we all agree with that. So, when you have a guy that's actually involved with the franchises and he feels confident enough about it to open 2 more in these conditions, that's a bullish sign. I'm still skeptical about the company, but there's money to be made here, and these guys are proving it. So remember, guys, there's on September 15th, there's a vote coming up to extend the time that they have to close the merger. They were supposed to close about the same time as Hyliion, but they need delays. Like they keep messing up. So now we will be voting to extend it to November 15th. However, from everything I've seen, they're still going to be merging by the end of October. So even though it says November 15th, the target date would be the end of October. Now, if we look at the price action, since that news came out, they've actually been doing really well. Finally, they're ramping up. And this is one thing that I wanted to talk to you guys about is the fact that sometimes it's those stocks that are kind of under the radar. People have been forgetting about them because this is a stock that just a couple months ago went up to 18, right? 19 even when the merger was announced. So even though right now it hasn't been doing well, a lot of us kind of lost hope with this management team and everything. These are the hidden gems. Like these are the hidden opportunities. Of course, right now at 14, like it already gained some momentum, but if you could have gotten the stock at 11 a couple days ago. So just keep that in the back of your mind. Like it's not always the ones that everyone's talking about. Like everyone knows Hyliion's going up. Everyone knows Graph is going up right now. But often you can find some really good opportunities in stocks that people have been like, it's, they kind of forgot about it and tossed it aside. So I feel like this is one of the SPACs that's benefited a lot from the new inflow of money into the SPACs. Until last week when they announced the new locations and when the market pulled back, this stock had no traction whatsoever. For a few months, they were like clinging to their support, really. They had no traction, basically since the merger was announced originally. So now they have some traction. They actually went up a couple days in a row. They're above what was a support before, about 14.12, which is now a resistance. Well, they passed it. Where do I see the stock going? Of course, we don't have a lot of data, but now we have to rely on Patrick's crystal ball. What do I see happening? Well, we had these peaks around 19. I don't see the stock going up tremendously more than that. I feel like this stock that's going to settle in the 18 to 20 range probably. Now, one of my new barometers is UTS. If a boring stock like UTS, which I've done a review on, managed to gain $5 in a few days before the merger, I feel like almost any SPAC can go up close to the merger. So to me, it's likely that it's going to go up a little bit more than where it is at right now. Is it a great opportunity? I don't know. I feel like there's better ones. But if you guys are looking for BurgerFi because you're a fan of the company and you want to be in them long term, you can still see some upside from here. Right now on MACD, we can see that it's on uptrend and it was overbought for a little while, but now it's back under 70. So right now, what do I think about BurgerFi? I mean, as I said, I still see some upside, but I'm not personally a huge buyer of BurgerFi. I had some warrants before, as you guys know. Now the warrants are at 317. So again, as I was saying, if you guys like this stock and you want to keep it long term, now is probably the best time to buy because after that, it's probably going to go up from here. Next up, I wanted to quickly talk about Hennessy Capital, which is going to be merging with Canoo. The reason I want to talk about it, there's no real big news other than they'll be talking at a conference and they're starting to do more PR. But the reason why I want to talk about it is because it ties in with my point about BurgerFi. This is the type of stock that's kind of flying under the radar right now. Everyone discarded it. In the beginning, there was some hype about it. People were interested in the skateboard. Everyone thinks that their technology is great, but there's a subscription model. We don't like the look of the bus. There's so many other SPACs that are more exciting right now. The hype. So this is a stock that's under the radar right now. And I just wanted to let you guys into my mind a little bit. When I'm looking at the different SPACs, where do I find opportunities? Well, it's stuff like this. If you look at the warrants, they've been going up tremendously. So this isn't just unique to Hennessy Capital. The warrants have been being bid up in a lot of different SPACs, but this is one where I opened a decent position, which I told some of you guys already, and it's been going up a lot. So now there's a disconnect between the warrant price and the share price. Either the warrants have to come down, or they indicate that there's a lot of interest in the stock, and the stock price has to come up somewhat. So keep an eye out on stocks like these, stocks that had a lot of hype when they announced the merger, but then they were thrown to the wayside and no one's paying attention. Sometimes you can find some good opportunities there. Next up, we've got FMCI, the Tattooed Chef, which is one of my favorite SPACs, as you guys know already. But I just want you to pay attention to the fact that this is yet another stock that hasn't really been doing anything for a long time. And all of a sudden, at the beginning of September, you might have heard a lot of YouTubers talk about the rotation. Well, I mean, how else do you explain the stock going up significantly like this? To me, it's money taken out of stocks like Tesla and other growth stocks like Zoom, and people have to put it somewhere. So they're looking for next opportunities, and SPACs are those opportunities. And then you have the people that pile on to stocks that are going up. Because otherwise, how would you explain this? Because there's no positive news with this stock. In fact, there's negative news. On September 24th, we're going to be voting to extend the merger date from September 30th to October 30th. So there's actually a month delay in the merger, and still the price is going up like crazy. So guys, I don't have a lot of, it's very hard to establish a price target for this stock. Right now, I feel like we're pure speculation territory because this is a stock I really believe in. They have really good growth, really good revenues, but we don't really have anything to compare with. We don't have anything on the chart to guide us as to what the price should be, and we don't have a lot of good companies to compare them with. The closest is probably Beyond Meat, and even then, it's not like a one-to-one apple-to-apple comparison. So be really careful with this stock. If you're like me and you've been holding it since the 15s, mid 10s, I mean, then just hold it and wait and see what happens. But if you're looking to open a position now, I would be looking at a short-term trade. I wouldn't be looking to open my long-term buy and hold at 25. I'd probably wait until after the merger to see what happens. Or, as usual, I'd probably look and see if there's an arbitrage opportunities with the warrants. And now let's talk about LCA, which is going to be merging with Golden Nugget Online. This stock's a little bit funny because this morning I woke up and I looked at my messages, and one of the viewers had sent me a message saying something like, Patrick, like what's going on with LCA? It's not really doing anything. All of the other SPACs are going up like crazy. LCA is not doing anything. What are you doing with it? Are you just still holding or? And I was like, well, it's been holding up really well. I'm holding. People are focusing on other SPACs, but it's going to like come up as the merger comes closer. And today we actually got a really nice increase. So whoever sent me that message, I hope you had a nice day today. So guys, like yeah, that's the thing is that it's been holding up pretty well. No significant jump like some of the other SPACs. That's another company where we're in the dark. Like there's really been no new information. We had the update on the revenues from the previous month, which were excellent. But aside from that, they filed their preliminary proxy statement on August 12th. Since then, we've had absolutely no update. That's been almost a month ago. So I believe that they're still scheduled to close in October, but we'll have to see what happens with it. As far as the pricing goes, you guys saw my video about my price target for this company. I still think we're on track for about $25. That's what I'm hoping to see. So we're doing pretty well. I'm still confident that as we get closer to the merger, and as some of the other ones wrap up, like once Hyliion is out, people are going to take money and put it in the other SPACs. So LCA, everyone's confident in it, everyone likes it. I'm pretty sure its time will come, but right now we're at that point where the only thing we can do is wait for the merger. There's no real news to report, I'm sorry, but we just have to wait for the merger and see where the price goes. All right, guys, let's wrap up with some controversy. Let's talk about Lordstown, ticker symbol DPHC. Now, I know some of you are ready to click the downvote button twice. It is what it is. If you've seen my review before about this company, you know that I like it, but at the same time, I thought that it was going to be dead money for a few months. And what I was going to do was wait until Hyliion and FMCI, LCA merge, take some of those profits, and ship them into Lordstown. And I thought that at $16 it was too high already. But I was wrong. I mean, sometimes it happens. I don't make the right call every time. Now, it's been going up tremendously. After the Republican convention, it had gone down a little bit, and I was like, well, now it's probably going to plateau. People are going to lose track of it, and closer to the merger, like later on in Q4, people are going to come back to this stock. But no, actually, it's just getting higher and higher and higher, and people are bidding it up. So we can see on MACD, I mean, it's huge uptrend and it's just not letting up. There's a pretty good volume too. If you guys can see, it's almost 6 million. The average volume was 1.7. So you can see that there's a lot of momentum with this stock right now. But the reason why I said that most of you wouldn't like it is that I just don't like the price right now. I feel like right now it's attracting the wrong kind of investor. Even at $16, you could think that it's people that are going to be investing in the stock long term. Like they want to support Ohio and they want to support American and all of this. But now it's getting to a point where it's just going up because people are bidding it up and momentum chasing. That's just the way I feel about it. The company, I like it, right? The fact that they have the means of production with the technology from the company, the in-wheel motor, right? And they had to just merge both and start shipping out products. But it's not the type of company that has a big moat around it. Any other company like Ford, which has the Ford F-150, which is the most popular model for pickup trucks when it comes to workers and construction sites and stuff like that, they just have to do a bare bones model of the F-150, sell it to fleets if they wanted to. Like they don't have any specific competitive advantage. Some people have been arguing with me about it. I asked them what's their competitive advantages, and they couldn't name one that's exclusive to Lordstown. So be really careful about this one. Again, same as I said about some of the other ones. If you're looking for a short-term profit, you just want to speculate, and you have a budget dedicated to that, then go ahead, like get into Lordstown. But at over $20 at this point, with a few months left before the merger, I mean, some people are talking about late October, but we've seen with all the delays, it's probably not going to be until November at least. For me, it's just not worth it over $20 right now. There's better opportunities. I mentioned to you guys, would you rather have 10 Hennessy Capital warrants or one share of Lordstown. To me, it's pretty obvious there's better opportunities out there. So I hope you guys enjoyed this week's midweek SPAC news and price update. I hope it helps you with your considerations when you're looking at the stocks. I'll see you guys in the next video. Thank you for watching. Tomorrow I should have a review on desktop metal. Some of you have been requesting it, so I'll see you then.